Hello and welcome everyone back to the Wealth Wisdom channel. Hope you're all experiencing a tremendous day. If you haven't already, make sure you're subscribed and following. This channel delivers you the genuine crypto intelligence before it reaches the mainstream. Several months ago, numerous traders believed XRP would never achieve $1 again, but the price has now transformed significantly. Today, we're breaking down one of the most fascinating psychological reversals in the crypto market. How sentiment went from XRP will never see $1 again to analysts targeting double digits. Months ago, traders declared XRP would never hit $1. Now analysts envision a potential $10 target. XRP broke $1 in November 2024, reached $3 by January 2025, but recent declines test investor confidence. Analysts suggest a bottom near $1.20 to $1.30, with a rebound possibly reaching $4 to $10 next. Bulls view current levels as accumulation. Caution remains, as a $1 retest could occur. XRP will never reach $1 again narrative. In a tweet, widely followed community analyst Crypto Bull noted that roughly 18 months ago, many traders insisted the asset would never reclaim the $1 level. At the time, XRP was on a historic bull run, breaking above the 50 cents range for good. Specifically, in November 2024, XRP's price broke out of the 50 cents range and surpassed $1 for the first time in 3 years. It later reached $2 the same month and continued to climb to $3 by January 2025. At the time, many believed that buying XRP under $1 was no longer possible, expecting only an uptrend. However, with the ongoing bearish market, XRP now risks dropping below $1 once again. For Crypto Bull, this represents another opportunity to enter before the next leg up. This is a perfect example of how market psychology works in cycles. When assets are rallying, the narrative becomes, "You'll never get this price again." When they're falling, the narrative becomes, "It's going to zero." The reality is usually somewhere in between, and the best opportunities often come when sentiment reaches extremes. Think about what was being said at different price levels. At 50 cents, traders said it would never reach $1. At $1, they said it would never go back down. At $3, some were calling for $10 immediately. Now, back in the mid-$1 range, we're seeing both extreme fear and cautious optimism. From never $1 again to double-digit discussion. The comments come during a volatile period for the market. Earlier this month, XRP fell near $1.11 after a broad sell-off triggered by Bitcoin sliding towards $60,000. The drop erased about 70% of gains from the July 2025 high, around $3.66. However, the asset quickly rebounded and has been fluctuating in the mid-$1 range, prompting debate over whether a base is forming. This is where technical analysis becomes critical. A 70% retracement from a local high is substantial, but it's not unusual in crypto bull markets. Several analysts now outline a bottom forming between roughly $1.20 and $1.30, with a potential breakout to $4. According to Crypto Bull, XRP's next milestone is a move into the double-digit range with a target of $10. Market watcher XRPL shared a similar view, describing the recent decline as market exhaustion and suggesting XRP could accelerate into higher price ranges soon. Let's break down what market exhaustion actually means. When you see a rapid 70% decline, followed by quick stabilization and attempts to recover, that often signals that weak hands have been flushed out. The sellers who were going to sell have sold. What remains are holders who have conviction or accumulation from those who see value. The $1.20 to $1.30 range, being identified as a potential bottom, is significant because it represents a structural support zone. This is where previous resistance becomes support. It's where volume accumulated during the initial breakout. It's where limit orders from strategic buyers likely sit. If this level holds, and we see consolidation rather than immediate breakdown, It increases the probability that this is indeed a base formation rather than a failed rally. Base formations are accumulation zones. They're where institutional players and informed retail quietly build positions while sentiment is still recovering from fear. Now let's talk about the next best opportunity perspective. In a separate commentary, YouTuber Jesus Martinez echoed the recurring theme of regret over missed opportunities. He reminded followers that investors have historically wished they bought early, whether Bitcoin at $1,000 or XRP at 10 cents, and suggested the market may be presenting a similar opportunity now. This is a powerful psychological point. Every major crypto rally has these moments in hindsight where people say, "I wish I had bought there." The challenge is that at the time, those moments don't feel like opportunities, they feel like risk. When Bitcoin was $1,000 in 2017, people were scared it would crash back to $500. When XRP was 10 cents, people said it was a dead project with no future. The best entry points rarely feel comfortable in the moment. They feel uncertain, risky, and controversial. That's why Martinez's reminder is important. If you're waiting for certainty before entering, you're waiting for the opportunity to pass. Certainty comes at higher prices, not lower ones. Meanwhile, analyst Zach Rector believes the market could revisit the psychological $1 level and below to complete a double bottom structure before a sustained rally begins. Rather than waiting for exact lows, he recommends positioning slightly above this level to avoid missing a reversal. He projects a $7 target in a new bull phase. This is a more conservative but strategically sound approach. Trying to catch exact bottoms is extremely difficult and often results in missing the move entirely. Markets don't usually telegraph the exact bottom with a clear signal. Reversals happen fast, and by the time you're certain the bottom is in, price has already moved 20% or more. Rector's suggestion to position slightly above the psychological $1 level, perhaps in the $1.10 to $1.30 range, balances risk and opportunity. You're not trying to catch the absolute bottom, but you're also not chasing after a 50% move has already occurred. His $7 target in a new bull phase is notable. That would represent roughly a 5x to 6x move from current levels, which is substantial but not unrealistic based on XRP's historical performance during bull cycles. Essentially, bulls see the current range as an accumulation phase after a 70% reset, while cautious traders warn that another retest near $1 is possible. Both perspectives have merit. The bulls are correct that 70% retracements often precede strong rallies. The cautious traders are correct that psychological support levels like $1 often get retested before they hold definitively. Sentiment is transitioning from fear toward cautious optimism. The same shift that historically preceded XRP's strongest rallies, according to analysts. This sentiment transition is actually one of the most reliable indicators. When fear is extreme and everyone is bearish, that's often the best time to position. When optimism is extreme and everyone is bullish, that's often the best time to take profits. Right now, we're in that middle zone where fear has dominated, but optimism is starting to creep back in. This is the accumulation phase. This is where long-term positions get built. So what's the actionable takeaway here? First, recognize that market narratives are cyclical and often wrong at extremes. Never $1 again was wrong on the way up. Going to zero is likely wrong on the way down. Second, understand that 70% retracements are painful but not unusual in crypto. They test conviction, but they also create opportunity for those with capital and patience. Third, consider the technical levels. The $1.20 to $1.30 range appears to be where multiple analysts see support forming. Whether it holds or gets retested at $1 is uncertain, but both scenarios could offer entry opportunities. Fourth, have a plan. If you believe in XRP's long-term utility and adoption trajectory, use volatility to build positions rather than exit them. If you're trading short-term, wait for confirmation of trend reversal before committing significant capital. Fifth, manage risk. Even if analysts are correct about $4 to $10 targets, the path there will not be linear. There will be fake-outs, retests, and periods of consolidation. Position sizing and patience matter more than perfect timing. Finally, remember that the best opportunities rarely feel comfortable. When Bitcoin was $1,000, it felt risky. When XRP was 10 cents, it felt dead. When they're at all-time highs, they feel safe, but offer less upside. The question isn't whether XRP will be volatile. It will be. The question is whether you believe in the structural case for adoption, utility, and institutional integration. If you do, current levels may indeed represent the kind of opportunity that people will look back on in 18 months and wish they had taken. The shift from never $1 again to double-digit targets shows how quickly narratives change in crypto. Don't let short-term volatility distract you from long-term positioning if you have conviction in the asset. If you found value in today's breakdown, don't forget to like the video and subscribe. This is Millionaire Finance, and I'll see you in the next one. This is not financial advice.